Welcome, Wealth Builder Nation, to the Passive Income Showdown, where today we pit dividend stocks against rental properties to determine which is a better investment vehicle for earning passive income. But before going into detail, I want to welcome you to Wealth Builders TV, where we turn hustle into strategy and strategy into income. From business funding secrets to passive income plays, we break it all down. No fluff, just facts. So now let's get back to the video, shall we? Both strategies have their merits, but they cater to different investor profiles, risk appetites, and financial goals. Rental properties generate consistent monthly income, often exceeding the yields from dividend stocks. With the right location and management, properties can provide inflation protection and hedge against market volatility. Let's dive into the world of dividend stocks. These stocks are shares of companies that pay regular dividends to their shareholders, providing a steady income stream. They offer the benefit of liquidity, allowing you to buy and sell easily. Investors can reinvest dividends to benefit from compound growth, and over time, the value of your stock portfolio and dividend payouts may grow. However, dividend stocks are subject to market volatility, and dividends aren't guaranteed. During economic downturns, companies might cut or suspend their dividends, affecting your passive income. Plus, relying on stocks alone might expose you to market risks. Now, let's explore rental properties. Investing in real estate can be lucrative, offering long-term appreciation, tax benefits, and a tangible asset. Investors control key decisions, such as property management and rental charges, allowing customization of income generation. Yet, rental properties come with initial financial barriers, requiring significant upfront capital and ongoing expenses. Maintenance, property management, and dealing with tenants can be time-consuming and require active involvement unless you hire a property manager. Ultimately, the choice between dividend stocks and rental properties boils down to your personal preferences. If you seek liquidity, lower involvement, and are comfortable with market risks, dividend stocks might suit you. However, if you prefer tangible assets, potential tax benefits, and are willing to navigate the challenges of property management, rental properties could be your path to passive income. Thanks for watching our Passive Income Showdown. Remember, whatever your choice, thorough research and understanding of your financial landscape are key. Thanks for watching Wealth Builders TV, where the goal isn't just to hustle harder, it's to build smarter. If you got value from this video, be sure to like, subscribe, and share it with someone trying to level up. And remember, the grind is temporary, but the wealth is generational. Catch you in the next one.